All right, good evening, everybody. Thank you for joining us, whether you're live on Zoom or if you're listening to a recording of our weekly Silicon Valley real estate market update. My name is Robert Cruz with the Lutz & Cruz Group, powered by Place at Keller Williams here in Cupertino. And if you're listening to this for the first time, I'll explain a little bit of what we do, what we try to accomplish with this meeting each Thursday evening. If you're coming back again, you got a sense of what we do. We talk to you about what the market is doing locally here in Silicon Valley, focus on Santa Clara County itself, on single family properties. But if you're thinking of the condo or townhome market, don't feel excluded. What I'm trying to do every week is show you not only a pulse of what's going on in our markets, but how we reach our conclusions about what's going on with prices, with listings, buyer demand, interest rates, and things like that. Anytime you would like to have a more detailed focus on maybe your property or something that you're thinking of buying or selling, or a neighborhood you're thinking of buying or selling in, we can take all the information that we shared tonight and synthesize it down into your local market and give you a more personalized analysis of what you will hear tonight. So if you're on Zoom and you've got a question, I'll try to monitor it. Raise your hand digitally or type in a question in chat and I'll try to catch it. If you're here, you can just raise your hand, shout it out. Love questions. I go a little bit fast and that's by design. I want to keep this right around 30 minutes. I don't want to take too much of your time. And quite honestly, it's not designed to answer all your questions. Again, it's just designed to show you the unique approach that we take at the Lutz & Cruz Group and a very detailed, granular data analysis of our markets and to help you make some really hard decisions out there in real estate. And why do we do it every week? Because that's how fast our markets move. Most real estate data that you will get from national resources, some of the bigger websites, they're looking at data that is 2 to 3 or 4 months old. And there's nothing wrong with that. I appreciate that. I read that. I take it into account when we're discussing our markets. You can't really understand what's going to happen next if you don't understand what has happened. You need to know the trends. You need to know what has been going on lately. But the reality is I've learned in 20 years of doing this business, especially in this valley, when buyers, sellers ask me what's going on in the market, what they're really asking me is what's going to happen next. They're thinking of buying, they're thinking of selling in the next 30, 60, 90 days. And they're really asking me what's going to happen in June when I'm thinking of listing, or what's going to happen in May. That's when we're going to be ready to buy our house. And so 20 years of doing this, collecting the data, analyzing the data, creating, noticing trends, following what happens in our markets. I've gotten a really good understanding of how to answer that what's happening next question. And I'm going to jump right in and I'm going to show you what we do. We just left March and we have the updated Silicon Valley data from all listings, all sales in our market. And I can share with you how that data affects what's going on locally at a very granular level. But we'll start again with that 30,000 foot view of the whole county. But even before that, I want to share sometimes in my research, I find some really well-written articles about what's going on in the market. And I found this one on redfin.com, actually. A great site, a great resource for buyers and sellers, and for us, frankly. They have an incredible research department. They put out a lot of great content. And, you know, technically we're competitors. I don't mind giving props to people that do good work. And this is an example. They released this article. They say demand outpaces limited supply, making some markets feel hot despite few sales. And there's a whole lot in that headline, which I'll show you about our market. And they write further, if it feels like there aren't enough homes on the market for the people who want to buy one, it's because there aren't. With that sentence alone, you understand the supply side of the demand equation is very, very low. As long as we have enough buyers for the supply that's available, the pressure on prices is going to be up. And that is true. Those two things are true. Very few properties for sale and more than enough buyers to buy what's available. So despite the headlines, despite a lot of the seemingly terrible news around the economy, around banking, around so many different sectors, the bottom line on the street level, not that many houses for sale, enough buyers to buy what we have and we offer. And so that's pushing prices upward. I think Zillow came out today, and after months and months and months of prognosticating saying prices will drop in 2023, now they're saying they're going to go up by the end of the year. It's not by a lot. I think it was like just around 1%, but that's from just a couple of months ago. Everyone was saying we're going to lose 5 to 10% of our value this year. So in 90 short days of the new year, to go from 5 to 10% loss in value to now positive, even though it's a single digit positive, that's a fast move. And it goes exactly to what we talk about in our team. We always try to focus on the speed of our market. When you focus on the speed of the market, it really exacerbates all the other conditions about supply, demand, and things like that. As buyers act quickly to make offers and buy what's available in the market, it puts further and further pressure on both sellers and buyers to raise the price. So let's jump into it real quick. So let's hit supply first. As the article said, there's not a lot for sale nationally. This is Santa Clara County, and this is Santa Clara County since October of 2007. So what I want you to focus on here is the bars represent the number of properties for sale in our market. 07, 08, 09, even through 2011, we were in the thousands of properties for sale in our market. Obviously, you see in 08, there was around almost 5,000, almost 6,000 homes for sale. That's not a terrible large number when you consider how many people live here. But we also know what was happening in 08, 09. A lot of those properties were forced sales, and we had a glut of properties available when the economy was really, really hurting. So the pool of buyers was also smaller. And we saw collapsing prices, collapsing values, 20, 25, 30% loss in values in that time. What's really notable about this chart, there's two main points. The first is, if you follow since around 2012, the number of properties for sale at any given time in our county has remained consistently low. It has not changed too much. You can see if you look really, really closely, it's gone even lower in the tail end of 21, 22 into 23. The other striking thing is the blue line is a number of new listings, and that's been pretty consistent. And it will show in a while the number of buyers has been also pretty consistent. So the one thing that has been consistently putting pressure on prices in Silicon Valley is the lack of available properties for sale. It's even less right now in the last 3 years of this 12-year cycle, keeps getting smaller and smaller. And more than anything, that has driven prices up because of the lack of available properties for sale. And for the future, again, answering that question, what do you think will happen next? Unless there is an onslaught of new properties onto the market. And that, it doesn't have to approach the 07, 08 numbers, but I'm talking, what if we reach 1,500? What if we reach 2,000? Then we might have pressure on prices downward because there's too much inventory in the market, right? There's nothing on the horizon that shows me we're seeing that doubling or tripling of current inventory in the next few years. Without that dramatic increase in available supply for buyers in the market, it's hard to envision the prices collapsing. It's hard to envision them even dropping. At worst, you see a flattening of prices, and we'll show that in a second. So if you're in the market to buy and you're waiting for those prices to drop, you will know when prices are going to drop considerably when you first see the supply of homes surpass what we've seen over the last decade or so. That'll be your first sign that prices are going to fall at any substantive level. All right, so the next is the price, right, and the demand. There's a lot of ways to measure demand, but I like to use this one, and it's simply days on market. How long does it take on average to sell a number of properties that we have available to sell at any given time? Now you can see here on this chart, this one goes back about 15 months. The end of 2021, the first part of 2022, very low days on market. Properties were barely lasting a week on the market. You list it on a Thursday, it sells by Monday or Tuesday of the next week, often with a lot of competition, again, pushing the prices up. You can see the result. As the number of days on market shrank, the list to sales price ratio rose. It's a very easy comparison to make. The faster they sell, that points to more and more buyers making offers on limited amount, and that pushes prices higher and higher and higher. The opposite is true too. When we had around May, June, the dramatic increase in interest rates, making the cost of money and therefore the cost of any good or service you were paying for more expensive, buyers shied away, buyers pulled back. And again, you could see very quickly both days on market, how long it took to sell the properties we had, dramatically increased, doubled from May to July, from 11 to 22 days. And then it kept getting longer and longer and longer. Important to understand, historically speaking, even the longest time here, which is 36 days in January and February of this year, that is incredibly fast for any market. But we've consistently been under 30 days for over 3 years. So you kind of reset the timeline. I can tell you historically 36 days is fast. But over the last 3 years and the way we're used to buying and selling real estate, that's a long time. That's enough to put pressure on prices downward. And you can clearly see it. As it took longer to sell them, that indicated more reluctance on buyers, more apprehension about what prices were doing or what interest rates were doing. You saw it take longer to sell, and you saw the offers that the sellers were receiving started to drop. Going from way over asking price to right around, and then eventually, for the most part of the end of 22, sellers were getting less than they were asking for. Now, a lot of people took that as prices are falling, but I always caution people, just because you got 97 of what you asked for, if what you were asking for was far and above and beyond what the market was bearing, right? It doesn't mean the house fell in value. You just didn't get anywhere near what you thought or wanted to. So when you're talking to anybody about buying or selling, understand these numbers, but you've got to understand what went into it, right? But nonetheless, over time, you saw by the end of the year, it started to fall. Got as low as 94% again in December and January. So that is still historically strong. If you in any market are getting around 94, 95% of what sellers are asking for, that's a good market. That's a strong market. Relatively speaking, and that recency bias of what it was just a few months ago, it looks anemic. It seems like that's not very good. We used to get 15% over asking, and now we're getting 6% under. That's a 21% swing. So don't fall in love too much with those numbers. Everything is relative. And that's why I say, when you're thinking of buying or selling, sit with us. We'll explain your situation, your property in your timeline, and we can explain these kinds of variances. So you should know what the 30,000 foot view is, but eventually you have to synthesize it down to your situation, your timing, your wants and needs. But again, generally speaking, supply remains really low. Demand remains very high. Always, that's going to put pressure on prices upward, right? And then the other factor that we follow very closely here, we kind of know how these markets work. We know what the rhythms are. And what you see here is from the Mortgage Bankers Association purchase application data stretching all the way back to 1990. And what I love about this is, this means the number of people in any given week that are applying for a mortgage in the United States, right? They take the number, they put it down, and then they plot it. When you're thinking about what's going to happen next, that central question that I think buyers and sellers always have when they talk to a realtor like us or someone on our team is, what are prices going to do next? You can always look at this and know when someone applies for a mortgage, that means they're going to start looking and making offers in the next 30, 90 days. So if the number of people applying for a mortgage starts to move up, you can guarantee more people will be in the market to buy in the next 30, 90 days. Conversely, if less people are applying for a mortgage, then the demand will fall. Again, when we're starting in our market with such a low level of inventory, We don't need a lot of buyers to push that market up. And so what we knew is around November 9th of last year, after a massive drop from the early parts of summer of 2022, when number of people applying for mortgages dropped by 30-40% year over year, we felt that pain in our market. Trust me, market slowed down, number of sales dropped by 30-40%. But around November 9th, something happened. Rates did not dramatically fall, but the buyers in the market that had to buy or felt a need to buy realized the prices aren't going to fall anymore, and the interest rates are not going to fall anymore, and I need to buy a house. So they got back into the market. They went first, talked to their loan officers, and they applied for their mortgages. We here at the Lutz and Cruz Group, we saw that. We're like, oh, it's November. Everyone is saying doom and gloom for the real estate market, talking about really bad numbers for 2023. And we looked at that and we said, we're going to have a hot year. We're going to have a hot start. Let's go and talk to the people that are thinking of buying and letting them know, despite what's been going on in the recent quarter, applications are up. That means competition will be high in January and February. We knew competition would be high. We knew inventory would be low. And so we told our clients, expect to pay more and it'll be fast. So when you see something you like, buy it and save by not having to overpay 30 or 60 days later. That's a hard thing to say when the entire ecosystem around real estate is saying news is bad, prices are going to fall. We're going to have a tough 2023, and we're the lone voice locally saying, nope, it's going to go up, right? It's difficult to say that unless you've got our experience and doing this and looking at this data week after week after week for 20 years, spotting the trends, knowing what are the things that are going to point to what's next, and then being able to articulate to you, even when it's tough news, but we owe you accurate news. So again, this is a big picture view. What does that look like? What does it look like, right? I believe this was yesterday. 30-year fixed rate dropped to around 6.16, right in that range. We got a lender in the house, right? We're about that, low sixes. About 4 or 5 weeks ago, we were pushing 7 again. That's how fast it can change. So we're in a very volatile market in terms of where were we 12 months ago? We were around 3%. We hopped up to around 7% around June, July of last year. We settled back down to high 5s, low 6s around November. And then we've been kind of whole point changes that we can get in 30 to 40-day cycles, right? That is a tremendous amount of volatility in terms of payment and affordability and the cost of housing when you consider it this way. So imagine if an interest rate can go up or down in 30 or 40 days, if our life cycle of the real estate stock at any given time is only about 20 to 30 days, the wrong decision on the wrong day can cost you tens of thousands of dollars. And so you need the most recent data. You need the most accurate analysis of what's it doing today. And if I'm getting pre-qualified today, what if the rate moves in 10 days and I haven't found the house I like? That's what we feel we owe to you, to stay on top of this information. When you come to us, we can give you that kind of guidance. And this is what it looks like. This is our Santa Clara County data, single family residences for the last 15 months, and it includes March. So what I want to show you, if you ever sit with us, this is the first thing we're going to show you. We're going to talk about what are prices doing. And we'll show you this. You can see, can you see my cursor? Yeah, you can. So you can see that blue line here. That is the number of new fresh inventory coming to the market in any given month. The red line is the number of homes that go under contract. I like it. I see it. I like it. I make an offer. I don't yet own it. It's going to take 30 to 40 days for me to own it. So it's not showing as a sell. It's just showing as a pending. But that's a forward-looking number. How many homes will sell in May? Depends how many we put pending in April, and so on and so forth. With such small numbers, only hundreds of homes for sale, we track this. When these lines come together, or they're just close to each other, that's putting tremendous pressure on prices upward. That tells you as soon as we put them on the market, they're soaked up. Somebody buys it, usually competing with at least one other buyer. When these lines start to drift apart, the pressure on prices lessens. Now, looking backward or forward, the first thing you want to know, there's obviously reasons why they come together or fall apart. But as a general rule, you're starting your search, you're starting to talk with someone like us. That's what we'll look at first. So we can look back and say, well, why did it fall apart? Because interest rates doubled, right? California didn't become a bad place to buy. Silicon Valley didn't lose its allure. It just became that expensive, that much more expensive overnight. No matter the good or the service, if you double the price, the buyers are going to step back a little bit. It didn't fall to zero. People still bought, but not at the rate they were. And then I talked about that November jump, and we said, oh, people are starting to apply for mortgages again. And it showed up. The lines even crossed in December, and they stayed close. And so when we looked at November and we told our clients prices are going to go up in the first quarter, I know what the Wall Street Journal said. I know what Amazon News is saying. I know what Goldman Sachs is prognosticating. They're not wrong. They're just looking at the entire country. They're looking at the entire ecosystem of real estate in a nation of 300 million people. I'm looking at an ecosystem where there's only 500 homes for sale. Only 500 homes for sale, with a 10x number of people that could afford and want those homes. So I'm comfortable saying they're not wrong. They're just not talking about you and your circumstance and our market. In this market, with 20 years of experience, I'm the expert. I don't have a problem saying that. I've got a track record to prove it. And when you speak to me or one of my agents, that's the kind of clarity and confidence we need to convey to you. We'll back it up. And this is what this is for. We're showing you, how do we come to these conclusions, right? And this is the first step. Where's the line? There's a lot that goes into it. I can make it as complicated as you like, but when you're asking me, what's the market going to do? Well, I look here. What are these lines doing? They're still close. But my expectation is next month, prices will rise, right? People write dissertations telling me why it will fall next week. I look at two lines. There's more than that, but this is where we start, right? And then you look at things like, you see here, this morning I was training my agents on this very slide. I bring all the agents together and I train them on this so they can go and speak to you when you're on a one-on-one and they're conveying the same information. And when I put this together last night, I looked and I said, oh, they're close, but that red line is starting to flatten and the blue line is still going up. That's going to put pressure on prices. That's going to lessen pressure on prices next month. And it should still go up, but it should flatten. There should be some softness in prices in the next 30 days, right? I can't tell you how proud I was when I put up this slide and I said, what do y'all see? And they almost said, it's flattening. Like, it's a great proud moment for me, right? Like, you guys are getting it, you understand it. And it's true, right? And they can see it. It's simple, it's so small. I have to point it out if it's the first time you're seeing it, but that red line slightly flattening, or this blue line is still going up, is going to put less pressure on prices to continue to rise at the level they were. Here's the other thing I see, the change from February to March. We entered from February to March, we jumped a number of listings by 14%. It's supposed to go up from February to March. The new listings jumped from to 28%. That's supposed to go up, but that went up more than it has been in the last several months. So the rate of increase went up. Why? My opinion, sellers read newspapers. They look at headlines and they saw buyers are out in droves in January and February. While it's pouring rain, they're standing in the line in rain to go see open houses. They're seeing headlines of 20, 30 offers, $200,000 over asking price. What would any rational seller say? The market's hot, let me list it. Finally, after waiting 8 months of dryness, no pun intended with the rain we've had lately, from last May, like, finally I can sell my house for what it's worth. So here they go, they jump in. Did they wait too long? That's what we're gonna find out in the next 30 days, right? As you see, the solds were jumping, almost doubled. Again, we're supposed to go up from February to March, but doubling, that's not normal. That's showing intense activity on the buyer side. And then I forgot to change this number. It's actually 628. So you see a jump in pending by only 17%. Now here's a subtle number. And because we have so few listings on the market, when the new listings went up by 28% and we're feeling good about our market, but the pendings only go up 17%. There's that flattening that you see up top. It's subtle, but when you see it in that format, one jumped by 28 and the trailing number only jumped by 17. That's good, but not great. That's not what we saw last month. So one is continuing at the pace of January and February, the new listings. One did not keep pace, the pendings. That's, I would like it, I'll make an offer. Do I expect prices to go up? I do. Do I expect them to go up at the rate they did in January and February? No. Why not? Because we watch this every single month, every single week. And this is what historically that tells me. And we'll show it to you in a couple of new slides here. This is another statistic that I really, really love. It really helps us to convey to our buyers and sellers what's happening next. But it's not a well-known statistic. And the reason it's so important to me, again, is because how fast our markets move. Most resources that you go to find out what's happening in real estate, again, they're 30, 60, 90, 120-day looks at what's already happened. When our markets move, Silicon Valley, every 8 days, every 12 days, every 20 days. We need more important information to convey that. The absorption rate is how fast will buyers soak up whatever number of properties we have in the market. So an easy rule of thumb, absorption rate. If there's 30 days in the month and we have 30 properties on the market and we sell all of them by the end of the month, we have 100% absorption rate. That's very good. Anything above 30% is a seller's market. If in those same 30 days, we only sell 15 of those properties, that's a 50% absorption rate. It's a 50, it's still good. If we sell all of them by the 15, that's a 200% absorption rate. That's extremely high, right? So with that background, look at what we did. Early part of 2021, incredibly hot, high triple digits. We can look historically and what did the market do? Our prices jump by 100,000, 200,000 every 30, 40 days. Historically, we know that. We could read that because the absorption rate of pending sales tells you what's going to close next month. So when you read that, you're always at least 30 days ahead of the market. So last year at this time, we had the normal January to February to March growth in absorption rate. Buyers come out after the long winter and they buy what's available. Very little available, they're in a frenzy. And then you see that collapse. That collapse was simply interest rates rising. Generally, it keeps going up at least through April or May. It didn't last year, but we know why it didn't. But if you're paying attention to this, we knew when we read this drop from March to April that May was going to be even cooler because it's a leading indicator. So let's look at what's going on today. Again, we jumped up in December and January, and then we flattened in March, right? We didn't make it to April. It did go up, 115 to 118, a 2.5% increase. That's the flattening I'm talking about. So please don't misread. I'm not saying prices are going to fall. In fact, I'm saying, and the data is saying prices should rise next month, but not at the rate they did the first 2 months. And then knowing how we sell and how our markets move in this market, in this area in Silicon Valley, the selling season usually starts in late February and lasts through May. We knew based on available data and the way we research and analyze it, our selling season was going to end. We thought it had a couple more weeks, but it might have already ended. Now, I don't want to sound like Chicken Little. I'm just saying the hottest part of the market might already be past us. Something is going to happen outside of the norm to make this go up again in next month period. I do not think it'll fall enough to drop prices. What I'm saying is, if you've been looking the last couple of weeks or months and you're like, oh my God, here we go again, price wars, I'm out. I'm not doing that. I'm not writing on continuing offers. Well, guess what? You were the first to know. If you're listening to this, you can go out next week. You can look at some of these properties and not compete in. Others might still think it is, but you don't. Now, the flip side is if you're a seller, I mentioned earlier, when you saw that new listing number pop up, they were saying, now is the time, finally, multiple offers. Well, guess what? You go to market next weekend and there's only 10 people there and you don't get an offer on Monday. Don't panic. Panicking is what some sellers did last May, June, July. And they read the headlines. They didn't look at this data and said, oh my God, it didn't sell in 7 days. They're supposed to sell in 7 days. What are we going to do? Take the next offer. And they lost tens of thousands of dollars because they didn't read the data to understand it's okay if it takes 3 or 4 weeks. It's worth it. The speed of the market just slowed down. That if you're a seller and you're looking at this and you're like, oh, we missed it. You didn't miss it. Your house will be worth tomorrow and the next day and the next day and the next week and probably the next couple of months. But very honestly, if we sit in your living room talking about your home and putting it on the market, we're not going to tell you to expect 20 offers. We're going to tell you it may take us 4 or 5 weeks, but we know the value, we know it's worth, and we'll wait for it. We'll do the right marketing, we'll set it up to maximize value in this given time, in this given market. And when we tell you we didn't get any offers the first weekend, we'll show you why not. You're not guessing, you're not wondering, did they really work? Should I have really trusted them? We always back up what we tell you with the numbers that show it. All right. So softening, not dropping. Nobody quote me that I said prices were falling, right? And here's the bottom line. That speed of market. We mentioned that early graph, and look what happened in March. We went from 36 days to 25. It doesn't seem like a lot. That's 11 days. That could 2 weekends of being on the market. It was starting to move that much faster. And what did we see? As we saw that soften and then drop, we saw a listed sales price ratio, which is telling you what already happened. This is a backward looking number. All of a sudden, homeowners are getting what they asked for, right? But it is softening. We had a big jump from 94 to 99, 5% increase. And last month, we only had a 1% increase. It still went up. Your home was still worth more. And it should probably be more next month too. But don't fall for the headlines. Understand that whatever is happening nationally, while it does have some impact on what we do locally, each market, each neighborhood, your property is different. We can do this kind of analysis in your neighborhood, whether you're buying or selling, and show you and back up with data, with numbers, and with a long track record of studying these numbers. When we advise you on a price and we advise you on a strategy, this is what it's based on. We do what everyone else does. We make them look good. We have the contractors to fix them if you need it. We have the stagers. We do all of that. We don't just rely on the numbers, but we also help you with this aspect that, frankly, very few other people can. Having taught realtors for 20 years, I know firsthand very few really understand it. It's hard work, right? It's really hard to understand. It's hard to speak to, but I'm convinced there's no better tool to really answer that question. What's going to happen next to my property? What's going to happen if I buy or sell? All right. So again, I went over a little bit more than I promised. I'm getting better. I'm getting close to that 30-minute mark. But again, whether you listened online or you're listening to this sometime later and have questions or want to speak to one of us, just reach out, call the person that invited you, or you can contact directly at the Lutz and Cruz group, and we'll do a one-on-one. We'll look at your situation, we'll look at your wants and needs, and we'll show you this kind of level of analysis on what you need to think about when buying or selling in Silicon Valley. And you can always welcome to come back next week. The data changes every week, and that's how we show up every Thursday to give you the freshest look. So with that, I wish you good night and thank you for joining us, and hope to hear from you soon. Good night.